Assalamualaikum and a very good day to our panels, Madam Yuslisa Wati Muhammad Yusof and Madam Nurhasniza Muhammad Hassan Abdullah. We would like to present to you on our company analysis of Jacob Berhad. Before we start with our presentation, I would like to introduce my groupmate. My name is Raina binti Muhammad Hassan.
My name is Nurul Ain binti Hairul Anno.
My name is Norana Iza binti Hamzah.
My name is Muhammad Arif Najmi bin Sukri.
And my name is Muhammad Hafiz Abi Razak.
Our agenda for the presentation is the introduction of Jacob Berhad, financial analysis, risk and return analysis, regression analysis, and technical analysis. Jacob Berhad is a Malaysian-based corporation in investment, asset, and management services. The organization consists of 5 major product lines. Rubberwood furniture, involved in the development and selling of rubberwood products. Packaging, involved in the transformation of plywood materials into cardboard boxes. Manufacturing of rubberwood, involved in the manufacturing and processing of rubberwood. Generic trade throughout the distribution of building supplies and other related items. In 2002, Jacob Berhad was established as UI Resources Berhad when it was announced on Bursa Malaysia Securities Berhad. Following this, it switched its branding as Jacob Berhad in 2006. As at 31st October 2020, Jacob Berhad has a total asset of 282.07 million compared to their total liabilities of 105.74 million. Thus, the total equity of Jacob Berhad is 176.33 million ringgit Malaysia. Furthermore, for the financial structure of Jacob Berhad throughout the year, the total has been increasing after falling in April due to the pandemic that occurred in March. The total revenue as at 31st October 2020 is 107.21 million ringgit Malaysia. Revenues reflect an increase in demand for the company's product and services due to the favorable market conditions. Next, I will present to you on the financial analysis by comparing the financial ratio of Jacob Berhad with its competitor, Latitude Tree Holdings and industry average. First of all, liquidity ratio is used to measure the firm's ability to meet its short-term obligations. For 2020, it showed that industry index performed better in terms of current ratio with 2.86 times compared to the company and its competitor due to industry has higher current ratio. Higher current ratio indicates the company has ability to pay back its short-term obligation, but if we compare the performance of Jacob and their competitor, Jacob Berhad performed better in terms of current ratio with 2.49 compared to their competitor with 2.16. In terms of quick ratio, industry still show a better performance compared to the Jacob Berhad and competitor. Higher quick ratio indicates the company has higher ability to pay without having to rely on liquid current assets. To be compared between Jacob and its competitor, Jacob has higher quick ratio amounted 1.77, which indicate that the Jacob has ability to pay without having relying on liquid and current asset amounted 1 ringgit 70 cent for 1 ringgit of its short-term liability compared to the industry. Lastly, in terms of net working capital, Latitude showed the better performance due to higher and positive net working capital amount 235,970 ringgit Malaysia. Higher net working capital indicates the company has more liquid and more ability to meet its short-term obligation.
Next, activity ratio is used to measure the effectiveness and efficiency of the firm in managing its asset. For 2020, it showed that industry index performed better in terms of account receivable turnover amounted 9.95 times compared to the company and its competitor, due to the industry has higher account receivable turnover. Higher account receivable turnover indicate that the company has very strong credit and collection policy. But if we compare to performance of Jacob and their competitors, Latitude Tree Holding has performed better in terms of account receivable turnover amounted 9.56 times. In terms of inventory turnover ratio, industry index still show a better performance compared to the Jacob Berhad and its competitor. Higher inventory turnover indicate that the company effectiveness in its inventory management is good. To be compared between Jacob and its competitor, Jacob has higher inventory turnover amounted 5.95 times, which is indicate that the Jacob effectiveness in its inventory management is good. As with RM1 investment in inventory, Jacob able to produce RM5.95 of cost of goods sold. Besides that, in terms of total asset turnover, Jacob and its competitor has performed lower than industry index. But Jacob has performed well in total asset turnover amounted 9.19 times compared to its competitor. This indicates that the higher the total asset turnover, the higher the effectiveness of firm in using all of its assets. Continue. In terms of average collection period, Latitude has performed well due to the lower in average collection period, amounted 37.64 times compared to Jacob Berhad. It indicates that Latitude has lower in cash cycle and has more cash available to meet cash requirement due to the short period in collecting receivable. Lastly, Jacob showed the higher in fixed asset turnover amounted 9.19 times compared to its competitor. Higher ratio is better, which is indicate that the company has more revenue that can be generated per ringgit of investment in fixed asset turnover. Moving on to leverage ratio, it is used to measure the firm's financial structure and the ability of the firm to service its debt. For 2020, it showed that Latitude has performed better in terms of debt ratio amounted 27.76 times compared to Jacob. Lower debt ratio is better, which indicate as lower financial risk. In terms of debt equity ratio, Latitude 3 Holding has shown the lower debt equity ratio, which indicate as the less exposure to financial risk compared to the Jacob Berhad. Lastly, in terms of time interest earned, Jacob has shown the better performance due to the higher time interest earned amounted 27.80 times compared to its competitor. It indicates as Jacob has higher capability and lower risk of default. First of all, profitability ratio is used to measure the firm profit to sell asset or equity. For 2020, in terms of net profit margin, it showed that Jacob has performed lower than industry index but higher than its competitor. It indicates that Jacob is able to generate more net earning available for shareholder compared to its competitor. In terms of gross profit margin, Jacob showed the lower of gross profit margin than industry index but higher than its competitor. It indicates that Jacob has higher ability to control cost of goods sold relative to its sale revenue. Next, in terms of return on asset, Jacob still showed the lower ratio compared to industry index but better than its competitor. It indicates that Jacob is able to generate net earning of RM0.0647 for RM1 investment its asset. Continue. In terms of return on equity, Jacob has shown a lower ratio amounted 9.07% compared to industry index, but much more higher than its competitor. It indicates that Jacob managed to generate RM0.0907 per RM1 of equity provided by the shareholder. Lastly, the operating profit margin of Jacob has shown a lower ratio compared to industry index, but higher ratio amounted 8.14% compared to its Latitude. It indicates that Jacob has cost of operate before interest and tax of 8.40% for each ringgit of sale. First of all, market ratio is used by the investor about the total profit, dividend and equity is allocated to each share of stock. For 2020, it showed that industry index has higher earning ratio compared to the company and its competitor. But to be compared between Jacob and its competitor, Latitude has higher price earning ratio amounted 24.44 times its earning, which indicate as higher prospect and better return to shareholder of Latitude company. In terms of dividend per share, Jacob has shown higher dividend per share amounted RM0.11 compared to its competitor amounted only RM0.06. Next, in terms of dividend payout ratio, Jacob has shown 0.85% of dividend payout ratio compared to its competitor amounted only 0.33%. It also indicates that Jacob has paid out higher of dividend compared to its competitor to their stockholder.
Expected return can be defined as the profit or loss that an investor involves on an investment that has known as historical of return, which is ROR. Expected return can be identified by multiplying potential outcomes with the chances of them occurring. Jacob Berhad has showed expected return amounted 0.1754%, Latitude Tree Holdings Berhad amounted 0.2797%, and while KLCI Index has showed the performance of expected return amounted 0.0215%, it indicates that investor who decide to investing in the Jacob Berhad stock is less risky than Latitude Tree Holdings Berhad because it has smaller range of possible returns compared to their competitor. But when comparing with KLCI Index, it indicates that both company of stock is high risky to the investor because it has higher and positive percentage of expected return than KLCI Index in 2020. Variance can be defined as the average of the squared differences from the mean. Variance can be determined by calculating the difference between each point and the mean, then square and average the results. The standard deviation can be defined as the statistic that looks at how far from the average group of number is by calculating the square root of the variance. Due to the squaring, the value of variance is no longer in the same unit of the measurement as in the original data. The standard deviation can be used for analysts, advisors, investors, and portfolio managers to identify and determining the level of risk of the stock of the company itself. The amount of variance for Jacob Berhad is 6.2365, while for Latitude Tree Holdings Berhad is amounted 15.9393. Meanwhile, the value of standard deviations of Jacob Berhad is amounted 2.4973, while Latitude Tree Holdings Berhad is indicated 3.9924. Compared with KLCI, both companies has performed higher value of variance and standard deviation in 2020. The variance of KLCI amounted 1.5442%, while the standard deviation of KLCI amounted 1.2426%. Latitude Tree Holdings Berhad has showed the higher performance compared to the KLCI Index, while Jacob Berhad has showed higher performance compared to the KLCI Index, but not as high as compared to the Latitude Tree Holdings Berhad. It indicates that both companies has greater dispersions of expected returns and expose higher and uncertainty of risk in the investment compared to the KLCI Index. The definition of coefficient of variation is a statistical measurement of the dispersion of data points in the data series around the average. The coefficient of variation is useful statistic as to compare the degree of variation from one data series to another data series, even the average is drastically different from one another. The coefficient of variation shows the extent of variability of data in a sample in relation to the average of the population. In finance views, the coefficient of variation can be used by investors for the purpose to determine the amount of volatility and risk is assumed in comparison to the amount of return expected from the investments. Stock Jacob Berhad has showed the lower of coefficient variation, which amounted 14.2369% than stock Latitude Tree Holdings Berhad, which has showed the higher of coefficient variation with 14.2762%. It means that stock Jacob Berhad has lower risk with lower coefficient variation than Latitude Tree Holdings Berhad. KLCI Index has performed 57.8981%, which is much higher performance compared to both companies. It indicates that both companies has lower risk due to the lower percentage of coefficient variation compared to the KLCI Index. Any investor who invests in between Jacob Berhad or Latitude Tree Holdings Berhad will incur less risk due to the lower coefficient variation comparing with KLCI Index.
Regression analysis. Definition of regression analysis is statistical method used for estimation of relationship between a dependent variable and one or more independent variables. The strength of relationship between variables can be assessed by utilizing regression analysis in order to modeling the future relationship between them. Simple linear and multiple linear is the most common model of regression analysis. Nonlinear regression analysis is usually used for more complicated data sets in the dependent and independent variables that show a nonlinear relationships. Regression also helps the investment and financial manager to value the asset and understanding the relationships between the variables. And now, I will explain about regression analysis between Jacob Burckhardt, Latitude Trees Holding Berhad, and KLCI. The average return is a series of returns generated over 3 years from 2018 to 2020 between Jacob Burckhardt, Latitude Trees Holding Berhad, and Kuala Lumpur Composite Index, which is KLCI. The average return of Jacob is 5.436%, which is lower than Latitude Tree Holdings Berhad, 80.30% for over 3 years. It indicates that Jacob Burckhardt has a greater return compared to Latitude, which is lower than Jacob Burckhardt. Compared to market return by the KLCI, Jacob Burckhardt has a not good return than market, which is 0.52%. Based on table above indicates that variance and standard deviation of Jacob Burckhardt is low risk with 5.5827 and 2.3628. Meanwhile, Latitude Trees Holding Berhad exposed to high risk with variance 164.443 and standard deviation 12.82352. 1 unit return of stock Jacob Burckhardt is 43.2542 units of risk compared to stock Latitude Tree Holdings Berhad, which is 1 unit of return of stock Latitude Trees Holdings Berhad is 60.00328 units of risk. Based on beta indicates that both companies are less than 1.0, which is less volatile than the market. It also shows that the Jacob Burckhardt have a higher beta than Latitude Trees Holdings Berhad, with 0.5422 and 0.2842. And now I will explain about SMA line for Jacob Burckhardt. The graph shows Jacob Burckhardt are plotted below the SMA line, therefore it indicates that the stock is undervalued, which is the beta for Jacob Burckhardt is 0.5422. In expected return result, future investors are advised to buy the stock. And now for Latitude Tree Holdings Berhad. The graph shows Latitude Trees Holdings Berhad are plotted below the SMA line. Therefore, it indicates that the stock is undervalued, which the beta for Latitude Tree Holdings Berhad is 0.2842. In expected return result, future investors are advised to buy the stocks, while for the existing investors are recommended to buy this stock either long or short term. The long-term trend of KSR market index has performed uptrend line or upward slope throughout the year due to each of low point is successively higher than the previous low point. We can compare when KSR have occurred uptrend structure movement, Jacob also will be going uptrend. In the both uptrend line that occur in the both short-term trends, give a trading strategy and signal to the investor about the condition of stock market. Usually, in the uptrend line, it gives a signal to the investor to buy when the price of stock market in the KSI index is pulling back to form an uptrend line. The price of stock in KSI market index keep falling until in the middle of September. In this downtrend line which form in the bearish market indicates that the market price level is no longer attractive for an investor to buy the stock at much higher price, as the stock might be sold at overvalue.
Support is a zone or a price level where price tends to find bottom level as it falls. This means that the price is more likely to bounce off this zone or level rather than break through it. Meanwhile, resistance is the highest price level and it formed due to price that increasing. Trader or investor tend to buy at the lower price, which means that the support zone and sell at the resistance, which is the highest price level. In early March 2020, there is a massive support breakout. This is a sign that the economy is slowing down or in a weak productivity and it caused a bear market. In early April, the price reached at its lowest and bounced a couple times and it shows a good sign to buy at that price. During the price rises in bullish momentum, there is a strong resistance nearby. It is a strong zone that the price tends to fall, but there is a break price movement. To make sure the price will long-term in buy, it must break through the resistance in between October and November. There is a big movement in bullish until the price breaks through the resistance and become a new support. As we predicted, the price rise massively and reached the highest price on December 2020. It also performed a new resistance, and at this point, many traders and investors sell this stock because there is a downtrend for a retracement. Single Simple Moving Average (SMA) is a smooth historical data by averaging the last few dates and putting forward the final average value. A closing price moving above the moving average is interpreted as a buying signal. Referring to the figure, the green arrow indicates where the buy signal is. It establishes an uptrend whereby the price will increase. Investors should buy the stock when price closes above moving average. Other than that, a closing price is moving below the moving average, interpreted as a sell signal. Referring to the figure, the red arrow indicates where the sell signal is. It also indicates the bearish signal where price of the stock will decrease. Investors should sell the stock when prices closes below the moving average. Next, moving average convergence divergence, known as MACD, used to signal both the trend and momentum of a security. We can read the histogram by setting the signal line as a benchmark. The histogram is positive if the MACD line is above the signal line, and the histogram is negative if the MACD line is below the signal line. The MACD indicators can be interpreted to determine the buy and sell signal. To identify a buying signal, the MACD line must cross over the line when the MACD is above the oscillators or zero line, or MACD histogram turns down above zero. It also indicates a buy signal. Referring to the figure 5.3.1, the green arrow indicates the buy signal, while the sell signal can be identified by looking at the MACD line, the cross below the signal line. It also indicates a buy signal if the MACD is below the oscillator or zero line. MACD histogram turns down below zero. The red arrow indicates the sell signal for both stocks. Furthermore, the Relative Strength Index (RSI) is a momentum oscillator that tracks price change, pace, and shift. The RSI is historically considered overbought when above 70 and oversold is below 30. Signals can be generated by searching divergence and swings to failure. The buy signal can be identified when the RSI is below 30 and after that move up and cross over the oversold line, while the sell signal can be identified when the RSI is above 70 and after that move down and cross over below the overbought line. The green arrow represents the buy signal and the red arrow represents the sell signals. The fourth indicator is price rate of change (ROC). The actual purchasing and selling of signals could only occur from just a reversal in the pattern of the actual price, not the momentum sequence. A bullish divergence arises whenever the price goes low, then adjusts higher fluctuations, and then lowers. Around the same time, the ROC is a low accompanied by a higher low. There is a bearish divergence whenever the price is high, then it just to fall down and then it touches a higher level. At the very same time, the ROC is high, assisted by a lower high. From the figure, we can see a bullish divergence in a short-term period nearing the end of March. It indicates that the stock is entering a bullish trend and the stock's price of rising. Meanwhile, nearing the end of the 2020, we can see a bearish divergence emerging and current stockholders are advised to sell the stock to avoid from occurring loss. Lastly, the stochastic oscillator being also a measure of momentum comparing a single closing price of security with a number of its values over a given period of time. The percentage K is referred as the fast and more sensitive indicator, while percentage D is referred as slow and takes more time to turn. The buy signal can be identified when the percentage K line is above the percentage D line in the oversold range, which is below 20, while the sell signal is identified when the percentage K line is below the percentage D line in the overbought range, which is above 80. The highlighted area is where the signal is and the arrow is in the stock price chart. Is where the green arrow represented the buy signal and the red arrow represented the sell signal. In conclusion, from all 5 indicators for the current data of Jacob, all indicators shows the same signal, which are a sell signal as the trend had reversed to bearish trend. All signals can be confirmed by using a few indicators instead of one, as there are some signals that appear to confuse the trade or investor. When the same signals appears for all indicators around the same time, the action can be done as it had been confirmed. Plus, some indicator may appear earlier or later.